Hi there, this is Steve McKay. I'm a mortgage agent at the Personal Mortgage Group in Hamilton, Ontario. That's me right there. And I am going to explain the CIBC mortgage break penalty. This is something that we get asked about quite a bit at the Personal Mortgage Group. CIBC and all of the other big banks, they calculate their break penalties a little bit differently than the stuff that we usually place. And I find it's very difficult to explain unless you have the numbers in front of you. So I figured I'd make a video, and here we are. What we're talking about is prepaying the mortgage. Now that's a fancy way of saying you are breaking the mortgage by basically giving the money back. And that's what you do when you break. You're giving it back. This is for a fixed rate mortgage. That's the most common. Banks try to push the fixed rates quite a bit, so I'm going to use that. As opposed to variable rate, which is just 3 months interest penalty anyway. That's pretty standard. I'm going to say, just for illustrative purposes, I'm using a guy off the street who has $255,000 left on his mortgage balance. And the maturity date, let's presume that this person is supposed to be due in 2015 for renewal, but they broke today. So there's 2 years left on the contract. And that's pretty typical. That is common. That's not, a lot of people think they're never going to break their mortgage, but life happens, and so you have to. Let's say that we're getting a rate of 2.99%, which isn't so bad. And then you get to this part right here. It says rate discount received. Well, I'm going to skip this part for now. Most people don't know what that is, and I'm just going to continue on as if I wasn't given a rate discount. So for this mortgage, I know if I had monthly payments, that my payments are about $1,300 on this kind of money at this kind of interest rate. So just based on that, I'm going to break 2 years early. My penalty is going to be $1,894. And that is, it says right below, 3 months interest penalty. So what they're saying is because they can reinvest this money into the market at a rate of 3.14%, they really don't lose too much money in the transaction, so they're just going to charge us their minimum penalty, which is 3 months interest. This is an example of the kind of break penalty that you get with a monoline lender or a mortgage broker originated mortgage. That's a fancy way of saying getting a mortgage through a mortgage broker. We really stress the importance of flexibility at the Personal Mortgage Group, and this is really where that flexibility is. You don't have to pay too much to break this mortgage. $1,894, it's pretty cheap. Now let's go back and talk about this rate discount business, because this is the difference between the mortgage broker originated mortgage and the bank mortgage. So rate discount, what they're talking about is how much of a discount you were given to get this rate. And unless you are a banker, you probably don't actually know what they're talking about. What they are talking about is their standard posted rate, which you can find on their website. This is posted rate, 5.14% for a 5-year mortgage. That's their standard rate. If you were to go into a bank and you didn't ask for a discounted rate, this is what they would give you. So based on that, 5.14%, minus 2.99, that gives us a discount of 2.15%. And immediately, when you put that in, you see we get a huge jump up to $10,000, just over $10,000 for essentially putting this discount in. Now, that's a huge number. That is enough to stop anyone from moving or refinancing. It's the difference between doing what you want to do and not being able to do what you want to do. You lose all your flexibility. And we know lenders who are just as good as the big bank lenders who don't do this business of the discounted rate. They don't incorporate that. They keep theirs, whatever it says on the contract, that's what you pay in the break penalty. And for whatever reason, nobody knows why, but for whatever reason, CIBC and RBC and TD and Scotia and BMO, they all insist on doing this discounted rate business. It's the difference between doing what you want and not doing what you want. And that's a very simplified way of saying it. At the Personal Mortgage Group, we emphasize flexibility. So check us out. This is our website, personalmortgage.ca. Give us a call if you like. We're based in Hamilton, but we do deals all over the country. Thanks so much.